Hey everyone, I am back with another podcast episode with a crypto expert named Gaurav Mehta. He has basically 13 years of experience working in cryptocurrencies, and there is a lot to learn from him regarding cryptocurrencies. So I have asked him a pretty basic questions regarding cryptocurrencies which every normal person or a beginner would like to know. So if you want a part 2 of this podcast episode, comment below. So make sure you watch this video till the very end. Hit that like button if you enjoyed the video. Subscribe to this channel for more content. And now let's begin with this episode. So as you are into the crypto space since 2013, that's more than 10 years and huge span of time. So like basically in 2013, most of the people never heard about these digital currencies and all. So how was your experience in the crypto space like in those 10 years?
So you have made me nostalgic. So I remember speaking at a length to friends of mine. Everyone that I came across about crypto is something huge. It is going to be change. It is going to change how we look at the asset, how the finances will structured. But nobody understood. So I asked to myself why it is happening, what is happening. Then I understood that in order to understand the cryptocurrency, you not only have to understand the conventional financial system that is operating right in front of us, but also the fundamentals lying underneath that, how the banking operates, how the P2P technology operates, what is the problem with the currency, how the central banks have failed to deliver their promises. So until unless you understand
Absolutely.
the basic or the problem statement, which are not usually sought by the individuals, you cannot understand the solution or the value proposition that cryptocurrency had. I was lucky
Hmm.
enough to read all those things during my preparation for UPSC. So I think that it was a perfect culmination that led me to understand crypto long before the market could understand its potential.
Okay, great. So like the young generation aged bit like in their 20s and 30s, so they are like mostly interested in investing in cryptocurrencies rather than the stocks and all. So how would you recommend a beginner to start investing in cryptocurrency? Like any kind of strategy, any resources to learn, anything?
So first of all, I would say that cryptocurrency is totally an unregulated domain. By that, I mean anybody right now, as of today, has a freedom to issue their own cryptocurrency and start marketing it as a next Bitcoin or Ethereum. And you, on the other end, I mean, as an individual person, it is quite difficult for you to do the diligence of what their technology is, what they are trying to do, how good is it, are they able to deliver it or not. So there are two parts of it. One is the noise, one is the marketing that is happening around the cryptocurrency, and second thing is the fundamental value proposition that every cryptocurrency are supposed to have. So based on your understanding, you would be able to filter it out. For example, I see a lot of people bullish on a cryptocurrency, recent crypto, I do not remember the name, Helion or Helix, something which allows you to mine your cryptocurrency by offering the Wi-Fi to the public. So you can offer your Wi-Fi, and once you offer your Wi-Fi, anybody would be able to access your network, and for that you get a coin. So people are
Absolutely.
very excited about it. They are investing money into that, deploying their Wi-Fi and earning their coins. So yes,
Mhm.
prima facie, it might seem to be good. I'm not saying it can be bad or it would fail in future. But question I should be asking is, okay, uh, will such kind of a open public network work? I don't know. I always have access to great Wi-Fi over my mobile and my friends' places. So would I need the third Wi-Fi? Maybe not. Okay, would government allow such kind of a decentralized Wi-Fi to function, because government has ensured that all traffic should be coming through a regulated ecosystem. I mean, regulated
Mhm.
exchanges, what we call data exchange or internet exchanges. So those are the questions that one should be asking. And based on that, I would pass on. For me, it's a pass. I'm not interested in neither mining this currency, neither investing in that currency. Because tomorrow, if 4G comes, the speed that is provided by this network would be no good. I was just trying to take
Hmm.
an example. But from the outside, when you look at this cryptocurrency, you'll be very excited. Wow, it is going to change the future.
Hmm.
So there are a number of cryptocurrency. One should be cautious about investing into them for two reasons. They are unregulated, and also won't be able to identify what the fundamental things they are trying to do.
Hmm. Recently, we all know that Luna, a cryptocurrency, was removed by most of the exchanges. So, according to you, what caused the downfall of Luna cryptocurrency?
So Luna, as we all know, is a kind of a currency that was issued by this is certain set of people or certain set of company which had a centralized control. First of all, what is the issuance? What was the market adoption? How the crypto was utilized? So most of the people believe that the crypto was pumped by the certain set of people, which brought in the attention of more people who were interested in speculation. So they started investing. So anything
Absolutely.
that is supposed to go up without fundamental value is doomed to come down. That's on the longer term. But here the
Absolutely.
currency failed on the short term is because it violated the fundamental law of finances. The
Mm.
DeFi frameworks that were built, they were promising an insane return of 5, 10, 18, 20%, whatever percent. But nobody knows where those funds were allocated, from where the
Mm.
returns were coming. So probably they were giving the returns from my investment per se. So nobody knows what kind of mechanism was deployed there, was utilized to deploy the capital there and mitigate the risk associated with it. That's another part. Another part is because these are economies are small, I would say pretty small. They are in a few
Mm.
$100 billion. So it is easy to for anybody to manipulate such kind of ecosystem. So there are certain speculation that Citadel and other Wall Street companies did short Luna very heavily in order to manipulate the market or bring those infrastructure down. So that gives us idea how susceptible this economy is to manipulation in the events of uh, in the events, I mean, in the circumstances where it is not regulated.
Okay. A huge meltdown in the crypto market. So most of the cryptocurrencies also lost their prices, like Solana, Bitcoin. So what do you think? What caused this, or like, what are your thoughts regarding this meltdown?
So I see it as a healthy correction that was coming in the market. So anything that, like I said, anything that goes up needs to come down.
Hmm.
By that, I mean,
Absolutely.
if your up is not defined by the gradual adoption in the market, if anything is
Hmm.
suddenly accepted in the market, then there is not a conviction. So
Hmm.
cryptocurrency went on from like $8,000, $10,000 to $60,000. So I
Hmm.
should be asking, are there n number of people who came and invested into this cryptocurrency, or it was just a, too much of passion of people that defined the price hike? So I could
Hmm.
clearly see within last 2 years of span, it was all the positive sentiment that was built around due to what we say, a large marketing activity, everyone talking
Active.
about crypto, everyone hyping crypto,
The
but
trend,
nobody investing in
crypto
crypto.
trend.
If I ask you, you might have not invested much into the cryptocurrency, although we
Yes.
you might have talked a lot about it.
Yes,
So that is the
absolutely.
scenario.
Hmm. And like government and RBI is behaving very strictly with cryptocurrencies. So what do you think? This action of government and RBI, will it cause downfall of the Web3 revolution in India?
So I think I need to correct your question. Yes, RBI has been stringent, or they have a negative outlook towards this cryptocurrency, and the Web3 ecosystem would have a different impact on that. This is where we need to get the information right. Crypto is a kind of equities or tokens that are issued on the blockchain.
Okay.
Blockchain itself is a technology whose first implementation is cryptocurrency. Blockchain can be used for n number of other use cases as well. So although blockchain and crypto both are interlinked, but both should be looked as a different perception. For example, if tomorrow government bans Ethereum or maybe Bitcoin, that does not mean blockchain is going to be killed. You would be able to deploy blockchain. I would be able to deploy blockchain. That's part one. Part two, Web3, what we see is about the decentralization of the Web2 infrastructure, wherein there is a lot of uh, wrath with the individual about how the data is being utilized by the centralized companies and how we can take back those powers from the government. And based on that, I mean, based on the potential of blockchain technology, people are trying to reimagine various functions of whole ecosystem, whether it be finance, whether it be governance, whether it be intellectual property or anything else. So Web3 is totally a forward-looking implementation of blockchain technology. Cryptocurrency is the first implementation. So irrespective of whether the first innovation stays there or not, the world would continue to progress, the technology would continue to evolve, whether the government like it or not.
What do you support more, like decentralized exchanges or centralized exchanges?
I think that
Mostly prefer.
I think the decentralized exchanges are also centralized exchanges. It's only the technology infrastructure that they use is different. To give you example, in India, we have a certain exchanges. Those are managed by the individual and the companies. On cryptocurrency, on blockchain, there are a lot of decentralized exchanges. There's a Uniswap, there's a Pancake Swap, etc. When you take a closer look at it, those are also managed by the institutions.
Absolutely, yes.
There are certain people who have used their private keys to deploy the smart contract. Now, a smart contract is facilitating the purchase and sales or trading of such cryptocurrencies. That's the part one.
Yes.
Part two things, centralized, there's always a place for the grievances and other things. On the decentralized, there's nothing. If something bad happens, if the code is bad, if someone finds any vulnerability, all your funds are gone. So there are a lot of gaps, I would say, in terms of scaling of decentralized exchanges. So I don't think decentralized exchanges are the future, because the government, as soon as they regulate, they are going to restrict the access to decentralized exchanges. We need to be answerable to government. There needs to be a consumer protection. There needs to be a customer support service whenever any service is provided. So look at decentralized exchange as just a companies or the infrastructure that is using blockchain rather than Amazon servers to deliver their services.
Crypto is based on blockchain technology, which ensures the anonymity of a user. So does it really make sense doing KYC on centralized exchanges when crypto is all about anonymity?
Crypto used to be all about anonymity. That was the core thesis of cryptocurrency back in 2009. But as the ecosystem has evolved, it has become centralized. Now, you wouldn't believe it is much easier to investigate any case on the blockchain rather than in the real world, because there's a whole audit trail of transaction available. It's difficult for you to launder money, and most of the time it is more difficult for you to liquidate money. So anonymity used to be a great value proposition of cryptocurrency in past, but as of today, I would call cryptocurrency as a pseudonymous. And in fact, for the people who are not even techie, the cryptocurrency is not at all anonymous, because you are creating your accounts with exchanges, you are purchasing crypto from there. That's part one of your question. Part of your question, yes, KYC is very mandatory, because until and unless we know who the participants of the financial ecosystem are, we are not capable of regulating it, and neither protecting the country as such. Tomorrow, if somebody uses cryptocurrency for bad things, how are you going to mitigate those? How are you going to control those?
Absolutely. Yes, yes.
So KYC is very mandatory in order to participate in any financial system. Yes, if you do not like KYC, you are more than welcome. You can go buy cryptocurrency wherever, whatever, and you can start trading on it. But sooner or later, your cryptocurrency is going to touch the formalized system, and during that day, you will be into the problem.
A new concept has also emerged. Like, it's not new, it became relatively old now. So, and all about NFTs, non-fungible tokens. So what are your thoughts on it? Like, does it really make sense to invest in NFTs? Because like most of the people just consider them as JPEGs, scams, monkey JPEGs. So what are the thoughts on NFTs?
Okay. Let me try to answer that question by asking another question. There is one patent filed by a guy, assuming a Kolkata. He's willing to sell his patent for $100 million. Would you buy it?
No, sir.
Okay. Now there is another question. There is a patent filed by Samsung Korea, South Korea. Would you buy it for $20,000?
Yes, sir, because it's from Samsung.
That's the answer. So NFTs are the intellectual property. Now this intellectual property can be a stadium ticket. It can be a Sachin signed poster. It can be Sehwag's success card. It can be a monkey. It can be Narendra Modi picture. It can be a constitution picture. So depending upon how you look at it, the asset needs to be purchased. So I do not know whether the monkey is a right decision to buy or not, but I am saying the value is in the eyes of beholder. So if everyone
Absolutely.
believes monkey is of great value, maybe the market would accept that.
Okay. So, like, you are a founder of Catax, which is a crypto tax platform managing crypto taxes. So, would you share something more about it?
Sure. So government across the world have started to regulate cryptocurrency, and the first step towards it is defining how the taxation are going to be work, how taxation are going to work on this. So Indian government has defined already 30% taxes, wherein the set of loss is not allowed. You and I, we are trading on various exchanges, maybe one exchange, maybe two exchanges. You might have your own cold wallet, MetaMask, Trust wallet, or maybe you have your own
Yes.
blockchain wallet. So a lot of time one not only has a KYC account, but they also has a non-KYC account. So we are
Absolutely.
transacting to and fro between them. Now the
Okay.
problem comes in, how do we calculate taxes? So if you are just on the exchanges, your profit and loss statement is not sufficient to provide you taxes information because set of loss is not applied therein. Now, so what is your current state of crypto transactions? How many transactions have you done? Where are your books? So until unless your books are there, how you're going to calculate the taxes? And then once you have calculated the taxes, how can you be sure those are right or wrong? Because you do not know the historical price. You might have done certain transactions in NFT. You might have a certain staking in a DeFi platform wherein you are getting a regular interest or the rewards. So there are a number of scenarios wherein the calculation of taxes is a nightmare for individual. And in India, the chartered accountants are of no help. They still think crypto is illegal. They don't know anything about crypto. They don't know how to bookkeeping or accounting. So if the ecosystem wants to grow, then the taxation needs to go at par with evolution. So if the government
Absolutely.
does not get required taxes, they are going to get more stricter with the ecosystem. So we understand
Absolutely.
that by solving the problem of taxes for ecosystem, we are going to push forward the acceleration of Web3 adoption across India and anywhere else.
Okay. So, like, what are your thoughts regarding the current Web3 technology, like how it will grow in specifically in India?
So in India, first of all, if we look at the participations in the Web3 ecosystem, these are my personal thoughts. Most of the participants are young chaps. By young
Absolutely.
chaps, I
Yes.
mean they might have a certain experience, they might have a deep experience. I'm not commenting on it. I'm talking about majority of the people. So the problem that we find or the startup that we create is based on the acuteness of the problem that we are trying to solve. So what problem are they trying to solve? Are they creating DAOs? Are they creating community? So obviously the content creation, everything is happening around the space. But the success of, look at Web3 as just a method of implementation. Technology is always an enabler. Technology is not an answer. So until unless young chaps like you and me, we do not identify the right problem to solve, which can be efficiently solved through Web3, the success of Web3 is not going to happen. So
Yes.
that's the first part. Now, when I look at the Web3, I'm still struggling to understand which problems can be efficiently solved with a Web3 that cannot be solved with a Web2.
Yeah.
So I'm still trying to learn, wrap my head around it.
Would you like to share something more with the viewers, like anything, whatever you feel like regarding the current decentralized concepts?
So first of all, let's not get swayed away with the jargons in the market. Decentralized, crypto, future, DAO, Web3, NFT, and everything else. Keep technology aside. All the big businesses are built on the fundamental of problem and solution fit. What is the problem that you're trying to solve? For example, Indian exchanges understood that there is a need of businesses that helps people to buy and sell. Today, they are valued at $1 billion. So
Yes.
that is the problem that they identified, and the solution is their exchange, and therefore their businesses a unicorn now. So likewise, keep aside the technology, try to understand what problem you are trying to solve, why you are trying to solve, what is the acuteness of the problem, would people be willing to pay for that solution, etc. Now, once you have a concrete answer of that, you can look into going with a Web3 or maybe Web5 now.
Web
That's
5.
one part.
Jack Dorsey.
Another part of my thought is that we need to understand what seismic shift is happening on the fundamental level rather than implementing technology on the surface level. Now, when we are deploying certain Web3 infrastructure or certain Web3 startup, we are looking at integration of MetaMask or maybe Coinbase wallet or anything else. So we are just using something that has been built by somebody else's in order to further think. But here in so many exciting things are happening at a protocol level, distributed technology level. So we should be focusing on a much deeper aspect of the technology, not just the consumer layer tech. Because like I told you, this is a huge revolution. So we can start questioning the revolution and try to identify much exciting things, or just raise a flag and keep marching forward.